In this video, we shall explore the fundamental aspects of investment. Our discussion will start with the definition of investment and continue with a focus on the vital significance of education and skill acquisition as foundational qualifications for embarking on the journey of investing. Subsequently, we shall delve into a comprehensive examination of dividend stocks and exchange-traded funds, ETFs, as noteworthy investment instruments. But before everything, please do not forget to subscribe our channel for intriguing content and share your thoughts in the comments below. Investment refers to the process of allocating money or resources with the expectation of generating income or profit in the future. It involves committing capital to an asset, venture, or financial instrument with the goal of increasing its value over time. Investing is a critical tool for building wealth and achieving financial goals, but it requires careful planning, education, and ongoing management. Beginners should start with a solid foundation of knowledge and a clear understanding of their financial objectives to make informed investment decisions. Education and skill development are critically important for beginner investors for several reasons. First of all, education helps beginners understand the risks associated with different investment options. It provides insights into the potential rewards and the level of risk involved in various asset classes, allowing investors to make informed decisions. When beginners understand the investment landscape and have the skills to analyze opportunities, they are less likely to make impulsive decisions driven by fear or greed. Education helps investors set clear financial goals. By learning about investment strategies and options, beginners can align their investments with specific objectives, such as retirement planning, buying a home, or funding education. Skill development in areas like asset allocation and diversification enables investors to manage risk effectively. They can spread their investments across different assets, reducing exposure to any single investment's volatility. Education helps beginners choose the right assets for their goals and risk tolerance. It allows them to differentiate between various investment options, such as stocks, bonds, real estate, and cryptocurrencies. Developing analytical skills, including financial analysis and research, empowers investors to evaluate investment opportunities independently. This reduces reliance on external advice and can lead to more informed decisions. Education fosters a long-term perspective. Beginners who understand the principles of investing are less likely to engage in short-term, speculative trading and are more likely to hold investments through market fluctuations. The financial markets are dynamic. Skill development equips investors with the ability to adapt to changing market conditions, helping them make adjustments to their investment strategies as needed. Education helps investors assess their risk tolerance accurately. This self-awareness is crucial for constructing a well-balanced portfolio that matches individual risk preferences. Learning about tax implications and strategies can help investors minimize their tax liabilities, allowing them to keep more of their investment returns. Education can help beginners recognize common investment pitfalls and avoid costly mistakes. This includes understanding the impact of behavioral biases like fear and overconfidence on investment decisions. Developing financial literacy and investment skills empowers individuals to take control of their financial future. It can lead to greater financial independence and security. The investment landscape evolves over time. Education encourages a mindset of continuous learning, which is essential for staying updated on new investment products, strategies, and market trends. Education and skill development in investing contribute to an individual's financial well-being. In summary, education and skill development are the foundation for becoming a successful investor. They equip beginners with the knowledge and tools to make informed, strategic investment decisions that align with their financial objectives and risk tolerance. Dividend stocks are like owning a piece of a company. Some companies share their profits with you, and that's called a dividend. It's like getting a little reward for being a part owner. You get this reward regularly, like an allowance, and it can help you now, while your investment also grows over time. Initially, start by learning the basics of stock investing and understanding how dividend stocks work. Research the concept of dividends, dividend yield, payout ratio, and the overall stock market. Open an account with a reputable online stock brokerage platform. Look for a broker that offers low fees, a user-friendly interface, and research tools to help you make informed decisions. Define your investment goals and determine whether you're seeking regular income, long-term growth, or a combination of both. Begin researching companies known for paying consistent dividends. Focus on well-established, financially stable companies with a history of maintaining or increasing dividend payments over time. Look at sectors like utilities, consumer staples, and real estate. Pay attention to metrics such as dividend yield, dividend growth rate, and payout ratio. These metrics can help you assess the sustainability and potential for growth of dividend payments. Aim for a diversified portfolio of dividend stocks to spread risk. Avoid putting all your funds into just a few stocks. ETFs focused on dividend stocks can provide instant diversification. Choose dividend stocks based on your research and goals. Look for companies with a history of steady dividends, strong financials, and potential for future growth. You can choose among different dividend stocks according to your preference from America, Europe, and other parts of the world. Some companies offer dividend reinvestment plans, allowing you to automatically reinvest dividends to buy more shares. Regularly review your dividend stocks and keep track of any news or developments that might impact the companies you've invested in. Dividend investing often benefits from a long-term approach. Reinvested dividends and potential capital appreciation can lead to significant returns over time. Dividend stocks provide a consistent income stream. The dividends received can supplement your regular earnings or retirement income. Some dividend-paying companies also have the potential for stock price appreciation over time. Companies that pay dividends tend to be more stable and well-established. They often have solid financials and a history of weathering market fluctuations. Reinvesting dividends by purchasing more shares can lead to compounding growth. Over time, your invested capital and subsequent dividend payouts can grow significantly. Dividend stocks come from various sectors, allowing you to diversify your portfolio and reduce risk. Dividends can act as a hedge against inflation. As companies raise dividend payouts, your income potential increases to keep pace with rising costs. Dividends can provide a passive income source, allowing you to earn money without actively trading or managing your investments. Remember that while dividend stocks offer these benefits, they are not entirely risk-free. Always conduct thorough research and consider your risk tolerance and investment goals before investing in any type of stock. Exchange-traded funds, or ETFs, are like magic baskets that hold lots of different things like stocks and bonds. When you own an ETF, it's a bit like having a piece of many different things all at once. They are cool because they help you spread your money around and not put it all in one place. ETFs pool together money from multiple investors to buy a diversified portfolio of assets such as stocks, bonds, or commodities. This diversification spreads risk, making it less likely that you'll suffer significant losses from one poorly performing investment. ETFs often have lower expense ratios compared to actively managed mutual funds. This means you keep more of your returns because you're not paying high fees to fund managers. ETFs trade on stock exchanges just like individual stocks. Mutual funds, in contrast, typically trade at the end of the trading day at the net asset value price. ETFs are accessible to investors with small budgets. You can start with a single share, making them a great option for beginners who may not have a lot of capital to invest. ETFs disclose their holdings on a daily basis, so you always know what assets you own. ETFs cover a wide range of asset classes, sectors, and investment strategies. Beginners can choose from ETFs tracking broad market indices, specific industries, or even niche markets. ETFs allow you to implement various investment strategies, such as hedging or short selling, to manage risk. Some ETFs are designed to move in the opposite direction of the market, providing a hedge during market downturns. Many ETFs pay dividends, as we discussed above, or interest income from their underlying assets. This can be especially attractive for income-oriented investors. ETFs generally have lower capital gains distributions compared to mutual funds, helping you minimize tax consequences. As ETFs have gained popularity, numerous educational resources, articles and books are available to help beginners understand how they work and how to incorporate them into their investment strategy. ETFs are often used in passive investment strategies, such as index investing. This approach involves less active decision-making about individual stocks. For beginners, ETFs offer an accessible and cost-effective way to start building a diversified investment portfolio. They provide a solid foundation for learning about investing principles, asset allocation, and risk management. Thank you for joining us on this insightful journey into the world of investment in Poetics of Success. Remember, education and skill building are the keys to unlocking your financial potential. Today we discussed the importance of education on investment, dividend stocks and ETFs. Don't forget to like, subscribe, so you never miss an episode of empowering personal and financial wisdom. Here's to your future success.